Hello everyone, this is Dr. Zaidi. Welcome to my YouTube channel, ZTube. In this video, I'll be discussing the differences between financial and managerial accounting. So what's the difference between financial and managerial accounting? The first main difference is the audience. Audience of financial accounting reports are the external audience, the external stakeholders, right? And the owners, the shareholders of the company. Creditors who wants to grant credit to the company, tax authorities or IRS, regulators, right? Those are the audience for financial reports. The external reports are prepared for the owners, creditors, shareholders, tax authorities, regulators, IRS, and FASB. So those reports are prepared following the GAAP, right? Whereas the managerial accounting reports are prepared for internal management. So the audience are internal managers, the CEO of the company, the controller of the company, CFO of the company. Those are the people who analyze the managerial accounting report, right? And why these reports are prepared? These reports are prepared for planning, controlling, and decision-making purposes. And now planning is you plan that what you are going to do in future, and then control, you constantly monitor whether you are on the target, on the goals that you have established or not, and then decision making, and then based on that you make decision, the final decision making. So managerial accounting reports deals with planning, controlling, and decision making. So financial accounting reports are regulated by GAAP, IFRS, or if you are in a country which does not follow GAAP or IFRS, then you have to follow that country's standard. So GAAP, generally accepted accounting principle, IFRS, International Financial Reporting Standards, and if you are in another country, as I said, which does not follow GAAP or IFRS, then you have to follow those standards. So those financial accounting reports, income statements, balance sheet, cash flow statement, or any other statement, those are regulated, right? Whereas managerial accounting reports are not regulated, right? You don't have to rely on GAAP rules or IFRS if you don't want to, and you prepare as management desires. Time orientation for financial statement is past. So the reports are past oriented. You have to use past data, the data from the previous month, the sales from the previous month, previous quarter, previous year to prepare income statement, right? The cost of goods sold from the past month, for the past quarter, or for the past year or financial year to prepare the financial statements for the company. So the time orientation for financial accounting reports are past oriented, whereas managerial accounting reports are future oriented. You budget for future, what's going to be the sales next year or next quarter or next month, what's going to be your cost of goods sold, how much raw material you're going to use, how much is going to cost you, what's going to be your labor cost, what's going to be your manufacturing overhead, your selling and administrative expenses, etc. Right? So managerial accounting reports are future oriented, right? You may use past data to prepare budgets, but if it's a brand new company, you don't have to use past data. You can just prepare, you can budget for future. And then as you move forward, you can control and then you can revise your reports, right? Or you can benchmark based on the other company's performance or within the same industry if you are a new company. So managerial accounting reports basically are future oriented, and financial accounting reports rely on the past data. And the information presented in the financial statements are financial, right? You will see the dollars amount, the sales figure, the cost of goods sold, the amount of selling and administrative expenses, so on and so forth. Whereas in managerial accounting reports, you can see financial and non-financial data. You can see all those budgeted sales, budgeted cost of goods sold. In addition to that, you can also see non-financial data. For example, how many labor hours you're going to use, how much time is going to take you to make a certain product, and other non-financial information which can be used to calculate the dollar figure, the financial information, but you can see those non-financial information in the managerial accounting reports. And the financial accounting reports are mandatory. They are aggregated and they are company-wide. What does it mean by mandatory? It is required by GAAP. It is required by FASB, right? It is required that you prepare those reports and you file for taxes. Whereas managerial accounting reports are not mandatory. If you do not want to prepare, if management does not need your budgeted financial statement, that's fine. You don't have to prepare for that, right? Financial accounting reports are aggregated. So for example, let's take an example of Procter and Gamble. Now, Procter and Gamble produce hundreds of thousands of products, right? So you don't see the income statement of a particular toothpaste, right? Or you take Johnson and Johnson, you don't see income statement for Johnson Johnson baby lotion, Johnson Johnson baby powder, or a toothpaste or a toothbrush. You will see the aggregated report for Johnson and Johnson. You will see the aggregated report, the financial statement for Procter and Gamble, for General Electric, for General Motor, right? Whereas in managerial accounting, you can see detailed reports, not necessarily aggregated. You can see how much raw material you have used, how much cost of goods sold within a cost of goods sold, how much labor, direct labor you have used, how much manufacturing overhead you have used, how many hours, labor hours you have used to calculate the direct labor cost. So all those things are very detailed oriented, whereas in financial accounting, it would be just aggregated. You won't see, the details of the labor hours that are used, or how much labor cost, and a certain type of labor that you have used. You will see the cost of goods sold. Financial accounting reports will be company wide. So as I said earlier, that you will see the financial statement for Procter and Gamble as a whole, or General Electric as a whole, or Johnson Johnson as a whole. You will not see a segmented financial statement, or financial statement that is prepared for a particular region. So for example, South America, North America, or East Coast, West Coast, or California, or New York, or Illinois. You won't see financial statements like that prepared for the external audience, but you will see managerial accounting reports are prepared segment wide. You can prepare for any part of an organization. You can prepare based on a particular product, like you can prepare a financial statement for a toothpaste or a Johnson Johnson baby powder that can be used by a particular manager, which is in charge of that particular segment or a product line. So you can prepare financial statement, many financial statement for of the same organization when you consider it that you are preparing it for the managerial accounting use. So thank you for watching my video. Please subscribe my channel for live updates and other videos.